These are my top predictions for 2026. If you're a trader and you want to get ahead, this is the bigger picture outlook. These are the instruments that you need to be following so you understand the flow of money. If you understand the flow of money, you'll understand where the volatility is going to get. And if you understand that, you're very likely to capitalize. So I'm going to get into this video. We're going to jump straight into it, and I'm going to show you how I use certain asset classes to determine the strength or weakness of certain pairs that puts you at a huge advantage. And I don't think most people do this, and it's so simple. Let's do it. So in this watch list that I've got right here, you can see I've got the DXY, I have silver, I have gold, I have Bitcoin, I have the Japanese stock market, and the S&P 500. Now you're going to understand at the end of this video why this is all important, especially for those of you that trade currency pairs. So you're going to now get an insight into my mind and how this has been tremendous for my results over the years. So I'll tell you what I'm thinking, and we're going to go a bit of back and forth. So bear with me, take some notes. You're going to learn a lot. This is saving you so much time and a lot of money. So naturally, the DXY, top predictions 2026. Now, my predictions for 2025 were as follows. I was looking for the DXY to sell off from where we are up here. If you guys remember this, we were looking at the price around December time. I believe I've done a video on this as well. I've done it internally in the community, that we're going to be looking for a phase 1, phase 2, and this will be a phase 3, which was complete. It's exactly what happened. What do I expect for the DXY moving forward? Well, we could get a continuation of that into this next low. And if I show you on the weekly time frame, it's either that or we're going to see a much choppier pullback, almost a smaller version of this moving sideways. So we'll just slowly kind of creep up like this, and we could do it for a long period of time before we make that next wave. Now, fundamentally speaking, could there be a big change in the dollar? Yes, there's one caveat to that. This next move is more complex than the 2025 prediction. If I'm completely honest with you, this one was a walk in the park. This one was easy because if you understand this structure, this was like textbook of understanding. What could happen next? This could get a bit more complex, but I do expect to see a lot of volatility on dollar cross pairs. Now, I think what's going to help us with a scenario like this is going from the dollar as a currency to then looking at the stock market, because you got to see it as money in, money out, right? So if we look at the stock market right now, and you see, let's clean this up. So S&P 500, I've been doing a lot on the S&P 500 recently. You can see that we are sitting around all-time highs. If I go to the daily chart, we're sitting right here. What do we tend to have before we move higher? We get a lot of expansion. So can price come back down, break these lows and expand? Yes, this is when a lot of fear comes in, and then we can rocket to the upside. What do I expect for 2026? I do expect another all-time high in 2026. Now, we could have this late December into January, but most of the momentum will come in January. What I'm trying to look at is whether we're going to hold in this area right now, which is still possible. If I show you on the lower time frame, we could hold here because that expansion that I was talking about can be happening where we are right now. And the reason as to why is we technically have already bottomed out. If you look at these wicks here, you look at this whole area as a range, if you like, we technically have already bottomed out. So this could be an area where we've tapped into all of it. We're moving up. This is a phase 1, phase 2, phase 3. Just the nature of price, everything about that, I wouldn't be surprised if we was to hold in this region and then this was an expansion of price to go up and move towards all-time highs. Notice how we created a bit of a gap there as well. Now, the reason why this is important for you traders is that if that is happening and we do move higher from this area versus this low, well, then guess what? What does that mean? What does that mean for a DXY? Well, what that means is that we're going to get more direct moves and more likely see the DXY sell off. And if we see the DXY sell off, guess what? We can have dollar cross pairs where we can take advantage of them. So that would make me shift to like a euro dollar, right? So we can trade EU, we can trade GU. We'd really be able to take advantage of price going up. Meanwhile, this is going down. That's going to be a huge one for 2026. So definitely take advantage of that. But you might be wondering, what kind of piece is this all together? Or why would that play out? Well, this is where we've got to look at gold. And I'll show you the Japanese stock market in a minute. It's a very unique strategy that we can use with the Japanese stock market. I also believe that if you're someone who's going to master hybrid trading, especially in Falcon, those of you going to master that, you are going to be able to benefit in ways that you've never seen before. I know that we're going to hit record numbers in funding because 2025 we've done over 10 mil. I think we're going to be going triple that into next year because of the hybrid model and the trading challenge and with the new things that I've got coming out. So why is gold important? Well, so if we look at silver has been rocketing, right? Is there a high chance that silver is going to keep going up in 2026? I do believe so, but it would be naive to think that we're not going to get major corrections in pursuit of that. Price isn't just a straight line. At this point, silver looks like crypto, right? It looks like a BTC chart. But the reality is these things are not going to last and they're going to sell off. And I think what we might get is a topping out of gold first, and then silver will then correct. Now, there are rumors of silver being severely underpriced, that we could be looking at, something as crazy as 80, 84, 88. And look, that is possible, but thinking there's not going to be a major correction is a little bit naive, even if it's a correction like this. So I will be keeping a close eye on that. But what I want you to think about is rotation, and more so for gold. Like if you think about how many trillions are in gold, right? So all we need is from the all-time highs, which could creep above, to the bottom of this range, from here to here, which is a pullback of approximately, 11%. So 11% pullback on gold. The amount of money rotating out of that and into riskier assets, because I want you to think about risk on, risk off. Right? So when it's risk off and it's more safety, it's gold. When there is war and political things going on, it is gold. When there is fear, it is gold. However, that behavior sometimes can change. So when we're in a more risk on environment, it's more riskier assets prioritized. It's the stock market. It's the Japanese stock market going higher. It is the S&P 500 going higher. It is Bitcoin going higher. So this is more of a video of, if you can pick the turning points of when the rotation's going to come in, that's where the most volatility will be there. And if the most volatility will be there, if you're trading currencies and you're on prop firms, etc., you're going to make a lot more money by doing this. That's why you have to have separate accounts. I spoke about that in funding mechanics. Having the different accounts is such an advantage in 2026. So you imagine you catch a rotation of gold selling off. Where do you think that money's going? That money is going into the stock market. It is going into riskier assets like Bitcoin. So if we look at Bitcoin, and I'll show you this on the monthly chart, what's the chances that gold rotates to the downside and you might see Bitcoin bottom out at, let's say, 74? Like, there is a high chance that happens. And if you actually look, we have an unretested high around here. So if I zoom in, can you see that? We never really significantly got there. Now, is there a chance that Bitcoin can just go up from here? It can, because one little shift in the market, you guys know the score, crypto can just carry on going higher. Literally 1 week of price action, you can be like up here again, and then suddenly you're a stone throw away from another all-time high. So what I see is this: either a slightly larger correction like that trickles its way down, we take out that low, that becomes a very, very key buying point for investors. That could be the topping out of gold, as in the shift. It's not always directly correlated to gold, but I'm just giving you an example of money in and flowing into different areas. I think your biggest edge next year is going to be understanding, what does that actually mean for me? And I'm teaching it right now. I'm just giving you this for free. Right? If you understand a rotation of money, you're going to be better positioned. And I even done videos on this before about, just by you understanding the DXY gives you a huge advantage if you're someone who trades just euro dollar on its own, which I don't recommend. But even if you did, you would gain a better advantage. Even if you only traded GU, you would have a better advantage by really understanding the key points on the DXY. So you kind of factor that in bigger picture. Now you see, right, if the market's going to turn around here and I'm trading some more different currency pairs, well, that's going to help me. If the stock market's going higher and the Japanese stock market, which kind of leads me on to the last part, if this is going higher, I want you to kind of see it like this, and I'll bring up Aussie yen. Right, I could bring up pretty much any yen pair, but we'll bring up Aussie yen for now. So if we've got the JP225, which is a tradable asset, you can do that, by the way. So if JP225 is going higher like this, what you'll see is Aussie yen will also be going higher, because as the stock market is getting more powerful, the currency itself is getting weaker. So then Aussie yen long is a smart play. So what I would use is, I would use the timing. If I wanted to look at it, I would look at it's not one for one. It's not like the DXY euro dollar where it's weighted 57%, but it's very, very close. That if I can see that, let's say the Japanese stock market is in an upward trend and we're starting to move towards here. Meanwhile, something like Aussie yen, let's say that was shaping up for a larger correction. It was building towards some nice buying areas for further highs. I can use this as a metric to say, right, we're on the money, we're moving in the right direction. The stock market is going higher, therefore the Japanese yen as a currency is going to be weaker for the foreseeable, for maybe the next 2 to 3 weeks. Well, guess what? Well, if Aussie yen is then positioned for some buys, then we look at some key areas. Then we look at where the value is. Then we look at where the bigger players are likely to step into the market, and let's see if price is going to gravitate towards that. And that helps me with my positions. So that's what it really is. It's about, I believe next year, 2026, if you want to get ahead, and you want to make sure that you make the most money in 2026, it's not going to be the people that are trading niche pairs. It's not going to be the people that think they can specialize in just one instrument. It's going to be the most hedged traders. It's going to be the traders that have got different accounts for different reasons. It's going to be the traders that know when to take a scalp and know when to take a swing trade. That's what hybrid trading is, but there's much more layers to it. I believe that's going to be the biggest shift, and I know for a fact next year, you're going to have people trying to copy this. You're going to have people trying to, they've already tried it. They tried to piece these things together, but they don't have the knowledge. They don't have the experience of it. Hybrid trading is the future, whether you like it or not. And you can either get involved or you can sit there and just watch everybody do it. But I'm telling you now, it's only a matter of time. These old, dated, scalper-based methods that they serve the purpose for a period of time, but there's no longevity in it. There's nothing wrong with scalping, but there's everything wrong with just only scalping. Statistically, most people won't make it. The hybrid model is what is going to keep you profitable in 2026.